Hello, everybody. Hello, hello. Happy Friday. We made it. We made it. We are live. Yes, we are live down here on the floor of the CBOE. Can everybody hear and see me okay? I appreciate the smashing, liking, all of that good stuff. Awesome. Thank you. Thank you. Thank you. Thank you. All right. Not sure if you can see here, kind of what is going on behind me. But what you will see and hear is, what? There's not a lot going on right now. I've been down here for a good portion of the morning, and unfortunately, I wasn't down here yesterday. So when I was talking to some of the traders, some of the brokers about the activity today, about the activity yesterday, they said to a person here, really nothing happening today, but yesterday was a huge, huge, huge busy day. And I know we all feel this way, meaning, boy, what is going on, right? Let me tell you, let me tell you, everybody here feels the same way. Literally, from brokers to market makers. Um, I am getting the exact response from everybody I have talked to, from everybody that I have talked to, saying no rhyme or reason for what is happening here. And I would say up until yesterday, the traders down here and the traders in the VIX pit, which is right over here to my left, not really concerned about what was going on because we hadn't really seen a pop in the VIX above that 25 level or so. We saw that yesterday, and we saw that very short-lived. We shorted very saw it very short-lived. Today, it traded all the way up to 27.84. It is now sitting at 24. Let me show you something here. I kind of teased this in the OpVol room earlier. So I walked over into the VIX pit because one of my really good friends is the lead broker in there, and he pinged me yesterday a little bit about this, and then he pinged me again. Let me see when that was. It was a couple hours ago. It was literally an hour ago. This spread right here. Can everybody see this spread? Okay, this is the 25-30 call spread in the VIX. That would have been a good one today. Didn't even think of that 59er. Yeah, love that. Love that. Okay, so this was a position that a big institution, we don't know who it was. Frankly, it doesn't really matter, but a big institution accumulated this position about a month ago, 300,000 times. So they had bought this call spread 300,000 times. Okay. And they paid about 80 cents on average for it when they bought it. Yesterday, at the very top of the market, not the bottom of the market, at the very top of the market yesterday, before the free fall, they sold 100K at 24 cents. Today, just literally 1 hour ago, they got out of the balance, and they got out of the balance this at 65 cents. So, what does that tell us? Maybe it tells us nothing. What it just goes to show, though, is not only traders, but big institutions as well. They can put on big positions, maybe looking for a certain move in the market. Maybe it's a hedge against something else. We don't know, right? Maybe they had some short volatility exposure elsewhere and they were trying to buy a little with this type of spread and cover some of that. Okay. But that was exited at a major loss. Again, maybe that doesn't mean anything. I am just pointing out something that happened here just over to my left in the VIX pit today. And you can see if we look at the volume today, you can see that traded 200,000 times. That traded 200,000 times. Okay. One of the other reasons it was so busy out here yesterday in the SPX, okay, what is special about a day like today, an expiration day like today? Not for stocks, not for other equities, but specific to the SPX. And it may be something that none of you know, but what is special about today? And I should say, not just today, but every month. Not every day, but every month. Anybody have an idea? Nope, not triple witching. Good guess. Good guess. Triple witching happens quarterly. So at the end of March or March expiration, June, September, December. Okay, options expiring, but we get options that expire every single day, right? We have 0 DTEs. We have daily options. Okay, so on the third Friday of the month, which this is, okay, which is known as the regular expiration or the monthly expiration. And you'll notice that when no wasn't rebalancing, you'll notice that when I put out signals, of course, now it's picking up. Just as I said earlier, there was nothing going on. Now it is picking up. I didn't hear what that trade was. I'm going to look up on the tape here and see what that was. That was 66.50, 66.75 call spread. Just traded $2.10, expiring this afternoon. Okay, 66.75, 66.80. So anyway, going back to the monthly expiration, okay, which is the third Friday of the month, doesn't have anything to do with the VIX because the VIX expires on Wednesday mornings. Okay, last time to trade a VIX option that's expiring is on a Tuesday, and then VIX options expire on a Wednesday morning. Okay, so on the monthlies, what we see in the SPX, and this is just in the SPX, if you were to look on whatever trade platform you are on, okay, doesn't matter, you will see what it says there next to SPX. Exactly. AM expiry, just like in the VIX, because when the VIX options expire, not on Fridays, but on Wednesday mornings, they expire and settle on a Wednesday morning. On the monthly expirations in the SPX, there are two expirations on the third Friday. There's the AM settlement, meaning that all of those options expire on the opening print of the SPX. And then there is the regular PM expiration, like what we're going to have this afternoon, at 3:15 Chicago time. So with the way the market was moving yesterday, with the extreme volatility we saw yesterday, and happening to be the day before a monthly SPX expiration, that added to a lot of the order flow. That added to a lot of the volume. Okay, so I just wanted to point that out. If you know anybody is ever looking to trade SPX, not SPY, but trade in SPX, just keep that in mind if you are trading a monthly expiration position, that you are selecting what you want, whether it is the AM or whether it is the regular end of day expiration. Okay, I am ready for a rapid fire, but Ross, you are here, aren't you? Because before I go into rapid fire, I had some questions just coming right into Market Minds here about the GLD position that we have. Excellent. So let me go back to that really quickly here. And I just want to clarify something. And all of you may not have this position because this is a position that we have on in the OE, in the Option Essentials room. Obviously, you're listening in here, you're getting a free look at this position. That is totally, totally fine. Okay, here is a position that we bought this morning in GLD that we paid $1.70 for. Okay, just a simple, nothing out of the ordinary, broken wing call butterfly. Okay, it's a butterfly because it's a 1 to 2 to 1 ratio, and it's a what's known as a broken wing because if you look here, the difference between the strikes on the long part of the trade and the short part of the trade are different. Essentially, we have a $7 long call spread to 378, 385, and we have a $2 short call spread to 385, 387. Does everybody understand that so far? I mean, this is nothing really out of the box, unusual. November 25th, 6805, 6885. December 4th, 6705, 67. Okay, does everybody understand that? Does everybody understand what the position is, why it's a broken wing butterfly? Okay, so we bought that at $1.70. GLD was down about $1 on the day, maybe a little over that when we bought that. GLD rallied pretty hard, actually. And it got to the point where the position was up, I don't know, 40, 50 cents or so, which was, really good. And instead of putting out any sort of exit order today, okay, because don't want to run into any sort of PDT, pattern day trading restrictions for people, what we did to kind of hedge the position a little bit is we put out a signal to change this from a 1 by 2 by 1 to make that a 1 by 3 by 2. So the signal that went out to do that was selling an additional 385, 387 call spread. Okay. And that is not considered a day trade, even though we put the position on this morning, because we're not closing anything out. We're actually just increasing the amount of contracts on the same side of the ledger as what we already have. We are already short the 385. We are already long the 387, and we are just adding to that position. Does everybody understand that? And the reason why this allows us to take some risk off the table here is because we're selling that for a credit. So we're reducing our overall debit. Huh, trying to find out what market just dropped. S&P's just dropped about 15 points. Definitely picking up. Some business definitely picking up here. VIX went from 24 to 2480. Still down on the day, but I think the market is really jittery and in disbelief of any rally at this point. Okay. Does everybody understand that? Ross, I know you're out here. Does that make sense to you? Do you understand that? So the 1x3x2, okay. Let's back up here a moment. Let's back up here a moment. Okay. Here's the original position, 1x2x1. So whether you had 1x2x1 or 3x6x3 or 15x30x15, that's still all in a 1x2x1 ratio. Okay. So what we instruct everybody to do, is when we're adding the position, we instruct you to sell, in this case, the same amount, same quantity of spreads as you originally put on. So if you had only done the butterfly one time, so 1x2x1, then you would just sell one spread, which would get you to 1x3x2. Okay. If you had this on 15x30x15, and we instruct you to sell the same number of spreads that you already have, you would sell 15. So if you sell 15 of those, you wind up with 15x45x30, which is the exact same thing as having a 1x3x2 position. Does that make sense to everybody? Does that make sense to everybody? Ross, does that make sense? Perfect. Perfect. I am glad you were able to join. I'm glad we got our emails going back and forth in time and you were able to join. Okay. And the reason we do that is because we always want to keep the number of contracts aligned. We always want to have the same amount of long and short contracts. So in here, we've got 45 long contracts. We've got 45 short contracts. All right, we are going to move on. Before we move on, and I really did not prepare today. I can't believe I forgot the most important thing of the day. Okay, I am just going to write the word of the day on here because I completely forgot to make a slide. I'm so excited about seeing her later on today. So if I could find my drawing tool right now, which would be just fantastic. I have no idea where it is. There it is. Okay. If you look closely to what Lou is wearing, there we go. The word of the day today. And of course, I can't even get that going on. So let's see if I can do this. I don't want a highlighter. I want that. I am so awful at this, guys. So awful when it comes to this. Anyway, the word of the day is hawks. For now, she's actually wearing a Blackhawks hat today. So whether you put Hawks or Blackhawks, whatever that's going to be, that will be the word of the day. We will accept both. And my apologies. And 3 o'clock can't come fast enough. Yeah, Go Bedard is right. 3 o'clock can't come fast enough for me, so I can bolt out of here and just kind of get up the road because they only live about a mile from here, and babysit. Okay, rapid fire time. Rapid fire time. And again, I apologize about word of the day today. Rapid fire time. Anybody have any questions on anything at all? Shoot it out to me. Happy to look at any sort of position, any stock you want to look at. If the Ross order doesn't fill today, okay, that's a great question, Kim. Let's take a look at that. Okay. You know that rather than just giving you the answer, I would much, much rather work it through with you, right? So, in order to get assigned, one of our short options, okay, awesome. Thank you, Trading Dan. That is just so awesome. One of the short options would have to what would have to happen, Kim? In order for us to be assigned. Do I think we've entered a bear market? I think we're in, a little bit of a correction right now. I don't think we're, in a bear market. So Kim or anyone, with what we see right here, okay, with what we see right here, what would have to happen for us to be assigned? Okay, exactly. Oh, thank you for the comments about Lou. Okay, right. One is a call, one is a put. Exactly. So, Kim, let's say these were your positions. Okay, those are not your positions because those are the short options. We have other long options. But let's say you owned these positions. Okay, let's say let's just turn this around here and say that was your position. Okay, so the 152.5 put and the 180 call. Okay, if you owned both of those, thank you, Ruben. There you go, Herbert. If you owned one of those, Kim, would you exercise either the put or the call The stock is trading, let's say 172. Anybody here, not just Kim, if you owned both that call and that put, and the stock is 172, and let's just say, it's here at the end of the day in 2.5 hours, would you exercise either one of those options? Okay, so Kim, if you exercised the put, if you owned that 152.5 strike put and you exercised it, what would you be doing? What would you be doing if you exercise that put? Anybody? Okay. Selling. Exactly, Kim. You'd be selling the stock at the strike price here of that put, which is 152.5, right? Okay, exactly, Pete. Robert, exactly. So, Kim, do you understand that if you exercised your put, exercised your right, that you would be selling the stock at 152.5? It's a $20 bad deal, right, Herbert? That's a $20 bad deal. Not good. Okay. Now let's look at the other side of it, Kim. If you owned the 180 call and you exercised your right, okay, to turn the 180 call into stock, what would happen there? What would that do to your position? No, if you exercise a call option, that gives you the right to buy stock. If you exercise a put option, that gives you the right to sell stock. If you exercise a call option, that gives you the right to buy stock. So if you exercised that 180 strike call, exactly, David, exactly, RDB. Kim, you'd be buying the stock at 180 when it's trading 172 in the open market. We are saying we owned. We are saying that we own these. If you owned both of these options, you would not exercise the put because you wouldn't want to sell the stock at 152.5 when it's trading 172. You wouldn't want to exercise the 180 call because you wouldn't want to buy stock at 180 when it's trading 172. Right? So now look at it from the other side. We don't own either of these options. We're actually short both of these options. Our position is this. So, do you think the other person, whoever that is in the world, that owns those options that we sold, do you think they would exercise their right on either the put or the call? We would love them to. That would be a massive, massive grand slam home run for us. But they would not exercise their right to either sell stock at 152.5 or buy stock at 180. Does that make sense to you? Kevin, you'll take 10. I'll take 8. 4. I'm not greedy. I'm not greedy. Kim, does that make sense to you? And I appreciate everyone's patience here and everyone kind of listening in as much as, some of you may be more advanced trading for a while. Reminders like this are always good. They always help. So, Kim, are you kind of caught up? Do you kind of understand that being short these options, excellent. At this point, we have little to no risk of being assigned. Now, again, in 2.5 hours when the market closes, if Ross Stores keeps going and gets towards 180, which would be a phenomenal thing for our position, then we'll make a decision whether we have that risk and we'll address it. By more than likely closing out the position so we don't have that assignment risk. Okay, before we get to the wheel, let me put this up here, Stephen. So here's the entire Ross ROST position. Okay. It always could happen after hours, Gene. On an expiration day, yes, somebody has until 4:30 Central to exercise a position. You're welcome, Kim. So, Stephen, if this is our position, what do we, optimally would like to see happen here today? I'm not saying going into next week, but today. Hey, Matthew, anybody can answer that. If we have this position on, how are you? Good. I started taking some of the stuff over there, and I'll take it a little bit more now. No, good. I'm all good. Thank you. Thank you. Um, Anybody, what optimally do we want to see happen here? Okay, the market just rallied 20 points off the bottom now. Yes, we wanted to always same answer, everybody, same answer. We would love to see it move to one short strike or the other. In this case, right now, as Kent just said, because the stock has rallied and now it's up to 172 and a half, whatever it is, we'd love to see it going and get as close to 180 today as possible. But Roger, as you said, one of these shorts. Yes. Okay. All right. Now the S&Ps have rallied and we're only 9 points off the high of the day now. It's funny. We always talk, and then I'm going to get to the wheel in a second here. But while I'm down here, I just kind of want to point something out. We always have conversations of when the market. You're welcome, Stephen. Excuse me. When the market is selling off, okay, it makes you emotionally a little bit more on edge, right? That's just inherent to all of us, right? That's why when the market is selling off, the VIX goes higher. The VIX is known as the fear index. Okay. So over the time that we've been down here for 35 minutes or so, we have seen the S&Ps go from up 78 points to only up 40 and now back to basically up close to 70 again. Not sure if you could hear or see the activity behind. But when we were on the way down and specifically down towards the bottom of where we were over the last half an hour, it was a heck of a lot louder and more activity going on here. And now that we have rallied back, we're not at the highs of the day yet, but back towards those highs of the day, it's not as loud, it is not as boisterous. And again, that is, you're seeing it in real live action here, guys. You are seeing it in real live action when we talk about the VIX, that it's the fear index and how emotions can take over. And yeah, Roger, it did make sense to a lot of people. There's no question about it. Okay. Yeah. Hey, there's a way to trade every market, guys. Okay. Here is our wheel again. I apologize for not having the right graphic up, but at least you got to see little Lou in her Hawks beanie cap. And to end the week, we are going to have, is it Tom 59 Bear? Bear, is that you? Is that the regular bear, Wilbur, that we always have out here? Thank you, Bushman. Because if it is, we are going to spin again as well. Let's see. Yep, there we go. Even if we can't even get you off of there, even if we change your name, it's unbelievable. Let's spin again. Thank you so much. Much appreciated. Here we go. We're spinning again here, folks. Who are we going to have? Gene Gus, Gene Monaco. Are you still in the house, Gene Monaco? Are you still in the house? Are you still in the house? Bingo. Okay. We'll wrap up a Friday with Gene Monaco. S&Ps are now up 72 points, and it is really quiet here. All right. Everybody, as a heads up for next week, being a holiday week, okay, the markets are open Monday, Tuesday, Wednesday, regular hours. Thursday, markets are closed for Thanksgiving. Friday, markets are only open until noon Central Time. Okay. I will be here all week, but we will not be doing market minds, obviously, Thursday, and then we're not going to do it Friday because the market is closed at noon. So we will have market minds Monday, Tuesday, Wednesday. Okay. If I don't see some of you prior to Thanksgiving, I wish you all a wonderful, wonderful, fun, family, friends filled holiday. Enjoy, and we are now back to the highs of the day here in the S&Ps. And at the same time, does anybody remember when the VIX was when the market was at its low 15, 20 minutes ago? What I said the VIX was? Thank you, Ty. Anybody have a reference? I remember where it was and what I said. 2480 was the number. 2480. In this rally back up from S&Ps only being up 45 to now being up almost 80, the VIX has dropped to 2360. 5% drop basically in the VIX just over the last 15 20 minutes. Again, you know, when you talk about the psychology, when you talk about the emotions, you're seeing it here in action, right? Market moving higher, people calming down, VIX calming down. When the market was moving lower, anxiety levels increased, VIX increased. All right, everybody. Glad we were able to do that live on the floor today. Again, have a fantastic weekend. I am like 2.5 hours until I see her, and I am just one happy guy. Have a great weekend, everybody. See you on Monday.